Thank you very much, David. It now falls upon me just quickly to introduce my friend, James Cameron. James may not remember this, but the first time we met was in 2005 on a telephone conversation following a letter that he wrote directly to me when I was a senior advisor to the then British Prime Minister. And to say he was irate was an understatement. He was not pleased at all at not being involved in a number of meetings in relation to planning for the 2005 G8 presidency. And I was working in a reasonably stressful environment. I looked at that letter and I thought, well, I cannot just throw that into the bin. I need to call James because I deeply respect him and I need to explain to him why he wasn't involved in those meetings. And from that, we may not agree on everything, but I think we've always really enjoyed the crack, as it were, about where we are in relation to tackling climate change. And through that time, I've seen him in Bali, I've seen him in Poznan, I've seen him in Copenhagen, and at each of these major UNFCCC meetings, he puts an enormous amount of effort into what he wears. He has amazing fashion sense. In Bali, he was dressed in traditional dress. In Poznan, there were furs. In Copenhagen, it was just all black roll necks. It was just fantastic. And I am particularly pleased that only on this criteria, not on others, only on this criteria, that the next UNFCCC meeting is in Mexico. With that, I give you James Cameron.
Thank you, Nick, and thank you, Tim, for organising all of this, and those who work to put together events like this. It's a pleasure to be here. It enables me to make connections with family and establish that I really am half Australian and I don't just live far away and don't care. I'm going to follow David. It's very nice to be able to follow David, someone who I admire enormously, with some themes that he's touched on, and I'll put a personal spin on them. I will begin in the world of ideas because the subject of this talk begins with a pretty grand notion that capitalism can evolve and be directed towards the solutions to a systemic problem of scale that challenges us all. At least, if unchecked, it is an existential threat. It's not possible to underestimate. You only have to listen to Tim carefully and others who have done the work to know that if we do not find ways of turning our economic system so that it's capable of dealing with scarce resources, including atmospheric resources, then we run risks that are both irreversible and terminal to the human race. That is the scale of the problem. And we have limited time in which to make the changes that we are discussing. So we are faced with a systemic problem of scale and limited time resources in turning around a system that has immense inertia in it. And you'll see that inertia very clearly in our financial system as well. And then I will say something about what climate change capital does and some examples of others who are working today, because the story that we're embarked on is not brand new. There is a lot of progress that is underway in dealing with the climate change issue within financial markets. And then finish up with some observations of how this change is likely to happen, with whom, what types of human beings are going to be involved in that change, where the innovation might come from, and maybe save a little passing remark for Australia and what might happen here and what Australians might do. It's proper that we begin with philosophy, that we start to approach the response that capitalism might make to the environmental challenge through the world of ideas, led by philosophy and followed by economics. It's my view that we have overvalued economics and we have disassociated economics from its moral philosophical base. We've given too high a premium to cost-benefit analyses that don't properly account for the natural systems upon which we depend for our existence. We have not fully developed notions of natural capital. I don't know if any of you are familiar with the writings of Paul Collier at Oxford, but he's just delivered a phenomenal blast at our capacity to properly understand and value natural systems, and I commend that work to you. And we have not evolved our reasoning in our political economy to the point where we can organize a political response around economic incentives that properly values natural capital. And it seems to me that if we're going to give ourselves a chance of rethinking, reimagining capitalism, we have to lead with philosophy, with values, with ethics, with the means by which we can transform a society, and then have economics as one of the methods for that transformation. If you disassociate economics from its moral philosophical base, it's just craft. It's useful craft, but it's merely craft. If we are going to manage this transformation, it is essentially an imaginative effort, and it's going to draw on disciplines that have previously been marginalized. Let me give you an extreme example. Maybe it's a sort of modern-day equivalent of David's point on investment bankers. We aren't going to get to grips with this problem until the day when we value hydrologists and soil scientists like we value investment bankers today. So one of the things I think I would like to suggest to you before getting on to the what's going on is that there is an intellectual revolution that's got to take place. There is a cultural revolution that I believe is underway that we will need to happen before any of these suggestions that I'm tentatively going to offer you from inside the investment world will have any meaningful effect. Otherwise, we'll be working at the margins. It is true, though, that the financial system offers the potential for a revolutionary shift if we can properly align the incentives. This marketplace appears to be valueless. Right? It offers up a kind of amorality, but it also operates within a culture. And it's possible, rather like using a judo throw to throw a much heavier person, if you know how to do it, it's possible to make the markets move in the direction of solving these big systemic environmental problems. So let me offer some examples of the what's going on. And Climate Change Capital is a commercial organization, but it's one with a philosophical intent to create wealth worth having. Each word in that phrase has some meaning that you can decode, but the structure of the sentence is important. In order to be able to prove that it's possible, as David's business is proving, to create wealth by doing good, you have to create wealth. And you have to do it by reference to standards that we currently have. So I've just said I think we need a philosophical revolution, an ideas revolution, a cultural revolution to rethink, reimagine how the world might be. But making the transition requires small steps to be taken along the way, and those small steps have to respond and relate to the status quo. And that's the iterative process we've got to be involved with. I cannot bring institutional investors along with me unless I can prove to them that they're capable of acting rationally when they invest in our funds. And that means they have to have financial returns. So, how do you get these two instincts to work alongside each other? Rational, intuitive, means by which we transform, but also by which we maintain some stability in the status quo. And the answer lies in leadership, in politics, in business, and in the investment community itself, because most of the investment community follows, it doesn't lead. The leadership within the investment community has to be built upon some fundamentals. Now, David's business does that. We'd like to think at Climate Change Capital we can do that in some traditional asset classes, like property, with a green buildings fund. It'll take a few years before I can prove this point, but I'm absolutely convinced that you can buy property, commercial property, with an attitude of mind that sees these assets as capable of solving problems, that works with occupiers in order to solve problems of energy efficiency and environmental performance, and at the end of it have a more valuable portfolio of properties than when you started. And you can do that by retrofitting buildings or building new buildings in a certain way with good design. And in the end, what you can demonstrate in a very practical way is that life can get better having solved the problem. So a deeply philosophical notion that this transformation can lead to an improved quality of life is endorsed by a very basic form of investment in property, where somebody can experience living and working in a building and know that that experience was good. And we have all the technologies we need for that. We have plenty of innovation available to draw upon, but we have not yet built the right attitude of mind, and we don't have enough stories. And fundamental to this transformation is a narrative. Investors might work off data, they do, lots of it, in great detail, but that data tells a story. The Carbon Disclosure Project, which David's been implicitly mentioned here, that I'm chairman of and very proudly so, is a data-gathering organization, a huge one, with about $70 trillion worth, a large chunk of that capital market that David was talking about, on one side of a dialogue with the largest companies in the world. But from that data comes a story of what businesses are doing, how they're managing risk, how they're finding opportunity. And we need those stories, otherwise we will not move society. We also have investments in infrastructure, in renewable energy infrastructure in particular. We have investments in the global carbon market, investing in reducing emissions in places like China and Southeast Asia and Central Asia, all driven by public policy. The reward for our investment in energy efficiency projects in China, or large-scale renewables in Mongolia, or waste-to-energy projects in Indonesia, the reward for that is a public policy reward. We get measured, our performance is judged on whether we can efficiently allocate capital in some difficult places and get a financial return because we've delivered a ton of carbon reduced. That's a public policy-driven market. It has many of the dynamisms and the risk-taking that all markets have. Bear in mind that that money is private money. We're not taking money away from hospitals and schools. In the public sector, we're risking money, pension fund money, with long-term liabilities and beneficiaries at the end of it. Doctors and lawyers and teachers and civil servants and nurses and builders, they've all got money in funds, and super funds as they're called here, and that money's been put to work in some difficult places in order to achieve a public benefit. But just say that system, that carbon market, works. All those beneficiaries win twice. They get a financial return, and they get a less risky world in which to collect their pension in. And that's the kind of systemic change we need. We need the super funds that are here in Australia, and they're big and they're powerful, and it's a big capital market, to be putting money to work to reduce greenhouse gas emissions. And they won't do that unless it's rational to do that, unless the rewards are there to do that, unless there are specialist investors who know how to do that, and the public policy incentives have been put in place to enable that deployment to be made sensibly. Now, we've started that. We have not begun today. We've started doing that. We've allocated over $1 billion into China alone in the last few years. And we've done it with, I have to say, some very talented Australians, one of whose mother is in the room here in the front row, taking risk with their careers, going out there, doing deals with men in hard hats in difficult places where the first part of the job is to explain there's something called the Kyoto Protocol that means we're going to bring money to you to reduce your emissions. It's quite an interesting challenge. We still don't know what the returns are going to be like from that. But the investors who've made the investment are looking for returns that are associated with other alternative asset class investments that they've made in the past. And they're prepared to risk their capital in order to get that type of return. Now, when you get to the edges of the capital market, where people are prepared to absorb higher risk, you also realize that for many, the systemic change can't happen unless they have a range of options. They're not all going to put bets on private equity or complicated instruments that are very much dependent on public policy. And so we've got to find ways to move large-scale capital. And believe me, this is a huge challenge. If you just look at clean energy investment alone, we need to deploy in the order of $500 billion a year, every year, between now and 2020 to get to the rather modest targets we've set ourselves. In the UK alone, it's about $50 to $60 billion a year in order to transform our energy system from high to low carbon now. I mean, starting now. And that's one of the reasons why we have a quite developed discussion about building a public institution, a green investment bank, to assist that process of deployment. 50 to 60 billion a year. Now, when we made the transformation towards natural gas and away from coal, that was an 11 billion sterling investment. And it was transformational. So at this scale, we've not done this before. So we need instruments that look a lot like long-term, stable, fixed income type instruments, like bonds. Now, I haven't got the time to go into the details here, but I'm happy to do it in questions. But the analogy I'd like to make for you is with war bonds. Under extreme pressure, a conflict that was near, and not like this one, approaching all around us from afar, a different kind of conflict, but we were able as a society to react to threat in a number of ways, including completely transforming our economy, our industrial economy, around the need to produce, I'm sad to say, munitions. But think what happened with that. We learned new techniques of manufacturing. We involved half of the workforce that previously wasn't. Think of how many women are involved. And just a small pause here, maybe a cue off what Nick said earlier. I'm sorry about how many males are speaking to you. If you want to visualize the human being, the type of human being who is best equipped to deal with the climate change problem, highly complex, dispersed, long-term, highly cooperative response required, not an aggressively competitive one, but a cooperative one, you think of a working mother. Right? I'm serious about this. The type of human being that's best equipped to make the trade-offs, who is going to work and not necessarily get a feedback immediately, not know whether they've got a reward, but know that they're doing the right thing. Think of working mothers. We have far too many aggressive males in charge and not enough people to understand how to balance millions of trade-offs and not get credit for it. So I'm deadly serious about this. But the key to this is building institutional capacity to solve long-term problems. And our political system and our financial systems are too short-term and they're not sufficiently cooperative. So we have to steadfastly commit to building the kind of institutions that can deploy capital at scale in the cooperative frameworks to enable these technologies to flourish, because they are all out there. We do not have to invent. The vast majority of the technologies which are available today do a good job of getting us towards a low-carbon economy. If we send the right price signals out there through things like cap and trade or tax, we'll uncover all sorts of others we don't know about yet. So let me finish off with this suggestion to you. Here in Australia, the big institutional investors that are vital to this economy and provide capital in other parts of the world too are extreme examples of our addiction to fossil fuels. This economy is high carbon. The investors here are committed to high carbon investments. They are absolutely wedded to them in a way which increases risk. You're not the only part of the world that does this, or we're not the only part of the world that does this. In the UK, BP is responsible for 12% of the total dividends paid across the entirety of the market. That's over-concentration, in my view. So it's absolutely necessary for the investment community to move away from that dependency on fossil fuel in a rational and sensible way, and they need real alternatives, real alternative investments, which we have not yet created at scale, and we're going to have to quite soon. Secondly, we are going to have to build a new cadre of revolutionary change agents. That sounds ghastly, but I think you know what I mean. This problem is not going to be solved by any single section of society. It needs a huge interplay between many types of skills, and we need the investment community to feed off that. We need an ecosystem of investments that enable a range of opportunities to be brought to bear, and we need actors who are quite different from those who have successfully managed the growth of our economy based upon fossil fuels. I am not expecting the answers to come out of the incumbents. I'm expecting the answers to come from somewhere like telecoms or the internet or people who have got experience in systems, hardware and software combinations. And thirdly and finally, I remain, despite over 20 years of working on this issue, I remain fiercely optimistic about our capacity to do that. This is a human-created problem. It's a problem that we are capable of managing to a successful conclusion within the tight time frame that David has set out. And we have enough today to work on to create the narrative that will release this capital flow at scale over the next 10 to 15 years. So nobody should leave this room feeling that this problem is impossible to resolve, that we need to be negative about the status quo, which, let's face it, is not brilliant, and that we can leave this room feeling confident that within the audience there are going to be dozens of solutions sitting there waiting to flourish, provided we get the right combination of finance, technology, and public policy to release them.